Good morning, everybody. It's March the 7th, and this morning I just want to do the STOXX 600 cloud chart market review, as well as looking at the respective cloud charts from a STOXX 600 sector perspective. Okay. So we're going to jump straight into the Pro Real-Time platform, loading the STOXX 600 index. You can see the trend, still a strong uptrend as indicated by the cloud. The front end of the cloud is still not given an earning warning signal of a potential downturn. The situation now is that we are pulling back a little bit. This 367 zone is a key support zone, and the STOXX 600 is looking like it's kind of forming a new base at the top end of the cloud chart support. I'm watching out for these levels 369 and 364 and 367 as key support. So a bit of a consolidation is needed, after a nice strong rally since November, December. And I'm watching very closely for potential profit-taking opportunity as indicated by a more significant MACD sell signal in and around these levels. So all in all, we're pulling back in a sideways moving consolidation mode. So the downside risk is back down to the top end of the cloud for support. Okay. Automotive and auto parts, bouncing off the top end of the cloud. Cloud is a key support zone, so could see a rebound here. We've just had a MACD buy signal a couple of days ago. So we're looking for a rebound from the top end of the cloud. Banks stuck within the cloud. Top end of the cloud is now resistance. We need to see it break past this cloud chart resistance for the uptrend to resume. Front end of the cloud is indicating somewhat of a negative picture, so there's a bit of a downside risk here. Downside risk is to the bottom end of the cloud here at 168, and we either need to see a breakout past the top end of the cloud here, driven by the current MACD buy signal. So we could see a rally as it breaks past this cloud chart resistance. So we need to see a follow through of this MACD buy signal with a breakout of the top end of the cloud resistance. But note here that this high at 179 and this one here at 182 is a significant resistance zone. Basic resources trying to rebound from the top end of the cloud, struggling a little bit. We've had a MACD sell signal, so there's a consolidation taking place. Consolidation back down to the bottom end of the cloud support here, so watch these levels at 416 and 419 for a potential rebound. But we've had a MACD sell signal, so that index is consolidating. Chemicals moving sideways with the top end of the cloud as support. We've had a MACD sell, so there's a bit of a consolidation going on here. We can see somewhat of a double bottom here with the top end of the cloud as support. So we need to see a rebound from that top end cloud level. Construction materials, that is also a little bit extended from the cloud, so we can see it come back to test the 446 level for support. We've had a nice little MACD buy signal there, so it's grinding higher, so you just be looking at buying these pullbacks to the 20-day and 10-day moving average as it goes higher, with the top end of the cloud as key support. Food and beverages, a little bit extended. The process underway with a consolidation here. Could see it come back to retest 622. Cloud chart support at 617 and the top end of the cloud here at 609. I don't think it'll dip right down to 609 anytime soon, but it would appear that this zone here between 623 and 617 is a significant support line. So there we could see it rebound from that 617 zone, which corresponds well with that front cloud support zone. So we a bit of a consolidation going on. Just had a MACD sell signal, so that consolidation can last back down to the 617 level. Financial services, steady grind higher. Cloud is key support, but it's consolidating now. Look at these old lows here, these old lows and old highs here. That was resistance, is now a new support zone. Watch out, we've had a MACD sell, so this consolidation can last up to the top end of the cloud. So watch out for 427 as a possible rebound area. Okay. Healthcare, bit extended. Need a bit of a pullback here. Watch out for the 744 zone as the next key support zone. And I'm watching very closely for a MACD sell signal for any time profit-taking opportunity. We've had a strong outperformance versus the STOXX 600 on the healthcare sector. Industrial goods, also nice, steady, strong uptrend. But a whiplash back and forth in terms of MACD buy and sell. But yeah, we could see nice entry points at the moving average Looking for support here at the moving average line and the top end of the cloud. So watch out for 477 as a nice kind of rebound support zone. Insurance, trying to rebound from the top of the cloud. Watch out for 268. This is a significant support zone. And we've just had a MACD buy signal, so we could see it needs to break out of that trading range. So watch out for a potential breakout there. Otherwise, we could see a consolidation back onto the top end of the cloud at 268. Media is now fighting for support at the top end of the cloud. If its support fails, we're looking at the bottom end of the cloud as the next support zone, 270. And if we see a rebound here, we could see it revisit the 285 resistance. But it would appear that we are now moving downwards towards the 270 zone. Watch out for this MACD sell signal. But we are at critical levels, trying to find support at the top end of the cloud. So we need to see a confirmation of that support before I would be interested in the trade for a rebound back up to the top of the cloud. Okay. Oil and gas is now trading within the cloud. It's somewhat forming a base within the cloud. Strong support here at 303 and the next level 307. Front end of the cloud is indicating that there's somewhat of a downtrend in place now. We've had a MACD buy signal here. So I'm looking at buying at the bottom end of the cloud support zone. So that's a nice kind of area to entry point in around these 307 levels for a possible rebound back to the top in the cloud at 317 and the top in the cloud at 320, 321. So that's the upside potential, and the downside risk is to the bottom end of the cloud here at 303. Favorable risk-reward ratio from a trading perspective for a possible rebound from the bottom end of the cloud supporting oil and gas. The household goods and products, a little bit extended. I need a bit of a consolidation back down to the top end of the cloud support, so watch out the 800 zone. This breakout here will most likely be retested to see how strong support is, so watch out for 821 as the first level of support, and then back down to the 805 level as a consolidation risk back down to there. Watching closely for the MACD sell signal here and for that consolidation to take place. Retail, moving sideways, bottom of the cloud, yes, support, top in the cloud, yes, resistance. We've now lost support at the bottom in the cloud. We are trying to regain that support level at 308. We're still subject to a MACD sell, but watch out if the support comes in and can manage to close this week above the cloud, yeah, that cloud level of 308. We could see it go higher with the first level of the resistance at 310 and the old higher at 313, 314 as the next key resistance level. Okay. So watch out for the retail there. If we see a MACD buy signal in and around these old support levels of 305, that would be a kind of a nice trade. But the downside risk is now to 305 if support fails at this cloud chart level of 308. Technology, nice steady uptrend, but extended. Need a bit of a pullback, but the price range is fairly tight, so there's quite a lot of accumulation going on in the sector. We've had a MACD, we're looking like we're going to get a MACD sell signal at some point soon. There's a bit of profit taking, so for a consolidation back down to the 20-day moving averages would be an ideal entry point. Watch out for 388 as the next key support zone. Okay, but this 26-day cloud chart moving average here around the red line here is a kind of a key entry point for a possible rebound. Okay. Telecommunications struggling, rebounded from the bottom cloud support here, and it's struggling to get past resistance at the top end of the cloud. It's broken past that resistance. The front cloud is indicating, yeah, there's a trend coming, early trend. So we could see it come back to retest support here. Watch out for the 290 level as a possible rebound zone. And then resistance here back up at 298. Okay. Travel and leisure, slow and steady grind higher with support at the top end of the cloud. Note that it's pulling back a little bit, and note the support zone here is in and around the 236 level and then the 238 level. So watch out for a possible rebound as it dips within that area. Just the downside risk here is we've had a MACD sell signal here, so we could see the profit taking place back into the dip into the support base here 234 is the significant downside risk with respect to the MACD sell signal. So we are dipping into that support zone. So it's coming back to retest support after a steady grind higher. Utilities, a little bit extended, struggling with the old resistance levels here at 283. So if it needs to we break past that level, or we'll see a reversal here. So then this week is critical for utilities to see if this resistance level of 283 is going to hold. So then we'll have downside risk back down to the top end of the cloud. Yeah, the first level is 275 to be tested. Okay, but overall, all in all, the stock 600. Yeah, in consolidation mode, in a bit of a pullback mode to the top end of the cloud, but so far so good. The front end of the cloud still indicate that we have somewhat of a good uptrend in place. Okay. Until next time, happy trading.